Some advice now for Perth seniors considering selling their home. If you're over 65 or know someone who is, now could be the perfect time with price growth pretty strong and an added federal government bonus if you're downsizing. But there is a warning this afternoon. To explain further, we are joined by finance expert Michelle Maynard. Hi, Michelle.
Hi, Mon.
It is called the downsizer contribution, but how does it work?
So basically, this is for our retirees who want to sell their home and get some money into superannuation. So if you're over 65 years old, you have a home that you have lived in at some point, but it doesn't need to be your current main residence, and you've owned it for longer than 10 years, you're able to sell that house and contribute $300,000 per individual or $600,000 for a couple into superannuation. Now, we know superannuation is a fantastic place to have your money because it's a low tax environment and it allows you to draw down to supplement your pension. However, this is going to be lowered to age 60 from 1 July 2022, which was announced in the recent government budget.
OK, Michelle, you also have a warning. What do retirees need to be aware of?
The really important thing that people need to be aware with this is when you are looking at things like your aged pension or moving into an aged care facility, the value of your home is not taken into account in these asset tests. However, if you were to sell your home and say purchase a less value one, put money into super, that superannuation balance is taken into account when looking at these asset tests. So some people may do this and find that while they are unlocking the equity in their home, they're actually going to get less, or in some cases no aged pension at all, because they're going to exceed those aged pension caps.
What if people are moving into aged care? How will the downsizer contribution affect that?
So this is a thing that you can use to your advantage. But again, the main resident isn't assessed when looking at your aged care contribution, either the upfront payment when you go in or the weekly fee that you pay. However, if you were to sell that home and put that money into super, that then does come into a play in assessing these fees. So really make sure you are getting some advice either from a financial planner or from Centrelink financial advisors who can help work through how selling your main residence, either purchasing one of a lower value or putting all of the money into super, is going to affect those payments for you.
OK, so we have a housing crunch in WA right now. Will this help with that? And will it boost superannuation balances too? What is the government trying to achieve here?
I think they're trying to kill two birds with one stone and hoping that by those older Australians rattling around in bigger homes are going to sell them and boost their savings that they can live off. And look, there are some criticisms of this program, and it really centres around people that are going to sell a house and buy a smaller one, whether that be an apartment, a unit or a townhouse. But they might actually start competing with first home owners in that lower price bracket of homes. While it is fantastic to unlock equity in our homes to be able to support ourselves, the criticism is that people are going to affect their aged pension, which they wouldn't have been affected by if they had stayed in the house that they were. So I think, look, if for the retirees that are self-funded, that are sitting in a house that is worth a lot and they don't have a lot of liquid assets to support a pension, this is a fantastic move. It's a way to downsize, get something smaller that's better for your lifestyle, and also have its money in your superannuation to support your income. However, it's not without its risks, and especially in this market where retirees might find it a little bit harder to find something new, I think there's a real hesitancy for people to sell an existing home if they're not entirely sure they can buy something smaller straight away.
And with regards to that competition with first home buyers, you don't actually have to downsize, do you? Someone can sell and upgrade.
Exactly, you can. The downsizer contribution is the name of it, but you don't have to. One, you don't have to buy another home. Two, you don't have to buy a smaller one. It's basically just about if you have surplus funds left over from once you've sold your house, you can put that into super as a contribution if you so want to.
It's a complex area. Thanks for helping to explain, Michelle.
Pleasure.